Thank you. The gentleman yields back. The gentleman from Iowa, Mr. Blum, who is the chairman of Subcommittee on Agriculture, Energy, and Trade, is recognized for 5 minutes.
Thank you, Chairman Shabbat. Did I get that correct?
You did.
I'm slow but trainable.
I
Took
even
me
got-
6
I
weeks
even-
to get that correct.
I even got Blum right,
Yeah,
too, because
very
everybody else says Bloom. So
We're making progress.
excellent.
And thank you to the panel for being here today, particularly Mr. Reynolds. I happen to be an entrepreneur in the software business myself, and one of my basement companies in the 90s went public in spite of the government, so I feel your pain. New business startups, 615,000 in the year 2005. 615,000. 10 years later, down to 450,000, down 40%. New jobs from new businesses, 4.7 million in the year 2000, down to 3 million 15 years later. U.S. startups are at 40-year lows. So I'd like to back up and talk a little bit about the formation of small business as it relates to tax policy. The only two ways I know to start a small business as far as capital goes is owner's equity. You put your own money into it, and you go to the bank for capital. And if I walk through this, and I'll take my own example, you're working for someone else typically, unless you inherit money. You're working for someone else. You live beneath your means, and you save some money. You put that money in a savings account in a bank, and the interest is taxed. So then you put some of the money that you've saved over a lifetime typically, maybe in the stock market, and then you sell those stocks in the capital gains, you're taxed. So you're taxed on your interest, you're taxed on the capital gains, and then you think, okay, I've got some money here to start a business. Do I really want to go into it? Odds are I could get sued. Nuisance lawsuits, we need tort reform. Regulations are out of control. Do I want to deal with that? There's a multitude of things. Also, taxes. So I'd like to ask the panelists, and Mr. Reynolds, I'd be interested in your personal story. What can we do as a Congress with tax policy to encourage savings? It seems to me that we discourage savings and encourage consumption in our tax policy. You can't start a business without capital, and banks aren't going to loan it all to you to start a business. So we need to go to the front end of this and say, how does our tax policy encourage savings? Because that is where future businesses come from. And I'll open it up to whoever wants to jump in.
I think that's an excellent question. There are a lot of places in the current tax code where the code is discouraging savings, basically double taxing or triple taxing savings. The issue of dividend taxes, capital gain taxes. You say you earn $100 in wages, you save that money, or you get taxed on those wages, you save that money, you earn a return, and then you're taxed again when you take that out as a gain. I think fundamental tax reform should move away from this system of double taxing savings towards a single layer of tax on saving and investment, so people are not discouraged from saving. It doesn't, and that it means it won't bleed into lower investment and lower economic growth, as which is one of the big issues under the current tax code.
Would you agree our tax code discourages savings?
Yes. I think that
Not a good thing for business formation.
Yes, I think that things that expand IRAs, 401ks, that would encourage savings. I think that fundamental reform that moves to a consumption-based tax would do the same. And I think the House GOP blueprint moves much closer to an ideal system than our current one.
I'd just say that you can't use an IRA or a 401k to start a business. And we can debate whether or not that's appropriate or not.
If I could interrupt, Mr. Reynolds, how did you finance your business when you started?
A combination of savings and loans. And that was 22 years ago, and it was considerably easier then. I think that the tax code is one part of the problem in that particular circumstance. I think certainly a shift towards consumption-based taxing rather than taxing on income would go a long way to help that problem. I think that as a small business person, access to capital is an extremely important issue, and Congress over the last 8 years has done considerable damage to small businesses' ability to get loans and access capital, and I think that That's something that needs to be addressed up perhaps outside of the tax code, but it's a very vital issue to us.
And I was on a bank board in every billion-dollar bank back in Iowa, and I was director of the directors, chairman of the directors credit committee. Every business loan over $1 million came through our committee, and part of the problem with extending or making loans to new businesses was they weren't credit worthy because they didn't have enough equity to put in it. Right. But we tax, as we're talking about here, we tax away a big chunk of this equity as people are saving, as capital is forming along the way.
Indeed.
The gentleman's time's expired, but Mr. Burton, if you wanted to respond.
I just want one thing. I released a paper yesterday that systematically walks through a reform agenda to improve entrepreneurs' access to capital, both in the banking and the securities regulation area. You might want to look at that.
Very good, I will. Yield back, I guess, the time I don't have.
Thank you. Gentleman's time has expired. And the gentleman from Florida, Mr. Lawson, who's a ranking member of the Subcommittee on Health and Technology, is recognized for 5 minutes.
Thank you very much, Mr. Chairman.